going on? Can you guys hear me? Just trying to see if you guys can hear me real quick. All right. I'm just gonna probably start, I don't know, 2:35 or so. I got called off from work. We had a low census, so yeah, I might as well just post videos. I wasn't planning on posting videos, but might as well go live and get some input from you guys, as well as probably just discuss my strategy that I have. I'm pretty excited with TSLY. I know there's a high expense ratio and everything, but really it's something that I'm just excited to turbocharge my dividend portfolio using that income. Give me 1 second and go from there. And I just want to post the link to my Instagram story. Let me get this.
Are you ready to build wealth and own your time? We want everyone to have access to simple.
Give me 1 second.
Join us. Subscribe to the Money Guy Show. Oh, I'm a power blackout. I'm going to take your power and severely inconvenience you. Boom, boom.
Nothing. I'm just doing a little quick share. I'm just sharing on my Instagram real quick. I really want to discuss Cologis. I was very surprised. I posted a video on that too. I was gonna bring that up too in a second. All right. I'm gonna look at a few things. I'm just gonna try to be a little bit more transparent. All right, time to have some fun. How are you guys? It's been a while. It's a lot of you guys are new to my channel, and yeah, I got called off. Our census was low, so might as well hop on here and chat with you guys for till about maybe 4 p.m. We'll do that and just chilling, and a lot of stuff, is going on with the real estate market. And of course, I'm not giving financial advice. this is for entertainment purposes only. Disclaimer in the description. I haven't done a video on SMG in a while. I may look at that again. But really, I want to talk about the REITs. And there's a lot of things that are going on, a lot of debt going on with REITs. And, I pulled the trigger on Prologis and then I dropped them. I saw how much that their potential, there could be a potential dividend cut with them. I'm not going to say there is. I could be totally wrong, but there's a lot of things regarding, their debt situation and how much they owe. And I may rebuy them and go from there. We'll see. I'm going to bring this closer. Weyerhaeuser, I haven't done a video on those guys in a long time. Very interesting real estate investment trust. If a company is in demand, a REIT's in demand, it's definitely something to look at. I know Matthew Ramey invested in Weyerhaeuser. I think he has that in his dividend portfolio. That's one that I'll probably have to do a review on eventually. I'll actually write that down because that one needs a little bit of attention. Write that down real quick. Yeah, that one's definitely a attention grabber. Let me look at one more. I gotta learn how to do that the way Ryan does that. Scott's Miracle Growth. I could probably do a video on them. I don't mind doing one on those guys as well. It's been a while since I did a video on them. But man, it's getting crazy in the market. I was just gonna see, IIPR. I think those guys had the hype train for a long time, and I do think they're way overvalued. They could be at risk for a dividend cut. But I like the diversification with those guys, with them and AFCG Gamma, and that's why I've been continuing to buy them. And AFC Gamma is a very high yield mortgage backed real estate investment trust. You can correct me if I'm wrong, but still have confidence in those guys. I'm still going to buy them. Again, with REITs, there's a huge risk of a dividend cut with a lot of stocks. The ones I think that would never cut their dividend, knock on wood, but would be like Agree Realty Corporation, Realty Income, Spirit Realty Capital, Prologis. I think those guys are very, very strong with their dividend and their FFO. And, they continue to just rack up some serious money. Probably American Tower as well. American Tower, I have my IRA and really solid dividend growth. What's wrong with VC? I've done enough videos on VC. You got to look at my previous videos, man. I have them in my dividend portfolio for a reason. Just type in the YouTube search bar, Dark Dividend VC. You should see probably a few videos of me doing VC properties. So that's not an issue. Usually, if you're curious about a certain stock, I probably did a video on them. So I'm telling you that the YouTube search bar, just typing in my name, like Dark Dividend, and typing like VC, you'll probably see a review. No. This is the background. What I do as a travel nurse is I crash at my parents. The one hospital that's close to my parents' house is like 25 miles, and I'm within the mile range. So what I do is I pay my parents weekly rent, crash over here. So you'll notice like I'll do like videos. It looks like I'm in a basement. It's at my parents' house when I'm doing this for travel nursing. You'll notice I'll start doing this at hotels. So I pay them rent. I have to cross my T's, do my or dot my I's as a travel nurse. And if IRS cracks down on me, I can literally just say, here's everything I'm doing. I'm showing you where I live. what I'm paying for meal prepping and everything. So that's why I do that. That's kind of what I'm doing. Yeah, I with the Feds increasing everything, there's just so much uncertainty. It's almost like they're going to create a recession just by interest rates. That's just ridiculous. Instead of spending so much, they decided to raise interest rates, and very disorganized. It's just they're screwing things up. But for a dividend investor, a lot of these stocks are at cheaper prices. Have to give you credit. Um, with GLW, I've been buying that one. I really like that. Um, I don't have an answer if the regional bank crisis is squeezing REITs. A lot of REITs were kind of dancing with the devil already with high payout ratios and high debt. So there's going to be probably some dividend cuts with some REITs. And, Arbor, you never know. There could be a possibility. There, you know, that's why you got to be diversified in your investments with real estate investment trust, and it's important to be diversified. I think you're crazy if you just go for like triple net leases with like realty income. I do believe that you should be in industrial rates, like a really good one's obviously Prologis. I'm in innovative industrial properties. Eventually, I'm going to buy Prologis. I think what I'm going to do is all that income I'm getting from TSLY. Now, I'm not going to bank on that because remember, the expense ratio is like 0.99%, but I'm going to use that income eventually to buy other covered call ETFs. Then they're going to buy other covered call ETFs. And then it's going to be a chain reaction to where I get to about hopefully maybe $2,000 a month. Knock on wood, that's not guaranteed. Then I can start buying those really good juggernaut dividend stocks and go from there. I'm working as a contract worker for United Health, and they're extending contract. Well, UNH is United Health is powerful, powerful, powerful stock. They're extending contract. Are you talking about price wise? Or are you just talking about like if they're overvalued? I think a lot of stocks are overvalued right now. I think they're overvalued. It's just me, but they're in demand. I have those guys for my insurance. Um, I have to pay out of pocket, being a travel nurse, and they have a good insurance program, and it's a good deal. They're a great stock. They're traditional and/or Roth IRA material. They increase their dividend, and if you have the money, go ahead. I don't have. It's not in my price range. But if they do a stock split or something, sure, I'm in. That's just how I am. But yeah, very. It's going to be very interesting with REITs. I've been loading up with REITs and financial sector stocks. I like bank stocks that are a lot bigger. Like Key Corp and Regions Financial, because if something happens, they're still going to be in pretty decent shape. They did pretty well during the pandemic. They still made money, and I'd have to look at SQM. It's hard to do an analysis like right away, or a dividend stock analysis, or a stock analysis, like right in front of you guys, because I like looking at revenue if they're in demand, how they're doing against the S&P. Affordability, PE ratio. Sometimes, obviously, FFO is more important for REITs. But it's it's very interesting with the U.S. USB. I agree. Just trying to think, like, how do you guys feel about my video that I did with digital realty? Did you guys like that video? Did you find that interesting? I was gonna see what you guys think about that. Pin that real quick. No, it's not. That was a typo. It's not in my YouTube discussions. Hold on. There we go. So I'm gonna reveal to you a few things with my portfolio. Um, Altria is one dividend stock. I did earn some decent dividend income. Let me see. So tell me about your thoughts on DLR, Mr. Patel. Let me know what you think in the comment section over here. Also, that's something that's really interesting. I haven't done a JEPI or JEPQ one in a while. It's that's one I'll probably have to do an update on, but incorporating um, that, I'll have to do a video on RC and the merger. I know I own those guys. I love the high yield that they have, and the revenue is pretty strong. I see them a little bit stronger than AGNC. I mean, I'm very disappointed in AGNC as a dividend stock. Their revenue is terrible. Their growth is terrible. I mean, it's just really not that good. What is the dividend growth stock that you think is affordable right now and in demand? I'm going to see what you guys think. Yeah, Omega Healthcare is another one. Yeah, I'll do one PBR. I'll look at that. I haven't done one on that. Omega Healthcare is those guys are pretty big, and that's one thing that has them still in decent shape. They haven't hiked their dividend in a while. Company am I bullish on? Too many. Rhythm Capital, I love those guys. I think I just bought some from my recent dividends from Altria that bought me some. Uh, I don't know. I'd have to really think about that. Being bullish on right now. Right now, it's kind of like whatever. I'm dollar cost averaging, and PSA. Yeah, that one's PSA is interesting. NSA, uh, it's tough. I have to really What am I buying more? Well, I have my percentage on M1 Finance focused on the financial sector stocks. It's been guiding me a lot to NSA, IPR, or I'm sorry, IIPR. Um, yeah, it's been. Let's see what is it? It's been buying me a lot of. It's been buying me a lot of Regions Financial. That one I think is at a discount. Let's see what I'm getting from dividends. It's getting me a little bit of Acre, Aries Commercial Real Estate, and Alpine Income Property Trust. It's also been buying me a little bit of Medifast, MED. So that's one thing that's honestly, that was a great catch by Tell. Yeah, VNO was a little bit of not a shocker. Hey, what's going on, Ethos? Um, yeah, it's going to be. Yeah, MP. The thing with MPW again, I'm still going to bank on people that need to go to skilled rehab. I mean, it's ridiculous how many people just they need skilled rehab. There's a rise in strokes. There's a rise in heart attacks. There's a rise in obesity and sedentary lifestyle. So that's kind of why I've been buying Omega Health Investors and MPW, because people are going to get sick. And I mean, if you go to your gym, you see fit people or people who are, putting an effort into getting fit again, like losing weight. Then you go outside of there and you go to a restaurant and you're like, holy cow, and there's people that are obese and just stop taking care of themselves. And I mean, I see people that at my age at 37 that 2 years ago, I look at them like I feel bad, but I couldn't even recognize them. And you know, luckily I didn't say this, but I was almost going to ask someone, if they were pregnant, and I would have got that wrong and just gained weight. And the sedentary lifestyle and the attitude towards a sedentary lifestyle is probably going to make MPW and OHI attractive dividend stocks. Tyson, I still like those guys. One of them that probably needs a little bit of attention is Conagra Brands, CAG. That's one that I need to get to 100 shares. They have pretty good dividend growth history. Again, I'm going to try to look at these covered call ETFs. I need to do a video on a few covered call ETFs. And I don't have an answer, Rockaholic. Probably. Yeah, I mean, do Wegovy and all these weight loss medications. Uh, yeah, it's let's see. I mean, Ozempic. I mean, that's all they're doing is giving people uh, Ozempic in the doctor's office, and it does help with weight loss. It's good for appetite suppressant. And or in my class at Cincinnati, like for my final semester, I'm with like two really good hardworking students, and we're doing one on. I'll probably discuss that with you guys in the future, but it's on one of the weight loss ones, and it's shown research that it helps out with weight loss as well, and some good ones out there. And the big thing, uh, Mr. Patel, with those is insurance. So if the insurance covers this, then they do this. The insurance doesn't cover this, they do that. So that's the one thing that's interesting as well. Um, Gosh, I mean, I'm going to probably post a video on SCHD. I do see a few things that are concerning. I already did a video on them dropping Prudential and adding Ford, which was like embarrassing. I don't know how anybody would add Ford as a dividend growth stock. But it's there's some trends with those guys that I find a little bit as a turnoff. AbbVie's earnings, um, they are a pharmaceutical stock, and I actually have to check with people regarding, investing and stuff. It's not because I like the stocks, but working in healthcare, I need to just cross my T's and dot my I's. I need to see if uh, if it's appropriate, if I should invest in dividend stocks that are pharmaceutical stocks, just because I work in the healthcare field as an advanced practice nurse. So that's one thing I have to look at. But AbbVie is, I think they should be fine. They have a lot of other medications. I did a video on those guys. You can just search Dark Dividend AbbVie. I did a review on them, and they also have a lot of medications out there, other than the issue with Humira. Yeah, they have just a lot of medications, and it's not exactly like what was said. Gosh, I think they have. I'm trying to remember their medications. Creon, like a digestive enzyme one. I'm pretty sure they carry that. Or was that Vitreous? I'd have to double check their listing, but they're big in. I'm pretty sure they're big in Botox as well. So that ain't going anywhere. People do it from a cosmetic purpose as well, and that's a big business. There should be an NP in that. I actually know physicians that like jumped ship and did that and like open their own Botox clinic, and they're making a lot more than they would as a um, Botox person, like specialists and stuff. Yeah, Botox is really good for migraines as well. There's a lot of uses for it. That's where you start going up the levels. You're like, okay, are we going to try to do this? And gosh, I feel bad for people that have severe migraines and stuff, especially like the migraines with aura. They know it's coming. They start seeing squiggly lines and they get a headache and stuff. It's just not good. Another one is Pfizer. I mean, Pfizer has some really good antibiotics. Zosyn is a very good broad spectrum antibiotic that they use, and that's for. Well, I have a dividend T-shirt. I'll probably have to make one, but I'm kind of one with glasses, because coffee. I love my coffee, so I have a coffee, one as well as a glass if you're trying to drink water, or if you're trying to mix your favorite drink, or if you're trying to mix have an IPA. I know Hidden Freedom probably would get a White Claw in his glass if I sent him one. So, that's one thing that probably would happen. Hopefully, he'll be back soon. I know he's doing well. The guy's retired on dividends, so kudos to him. Matt Money might hop on here. I was just texting him a little bit, and he's doing pretty well. His dividend income, I have to give him props with Pepsi stock. That's a very good one, and that's one thing that I plan on doing with my covered call ETFs is buying those type of dividend stocks with that income with those covered call ETFs. Because I mean, my gosh, the dividend growth of Pepsi is like amazing. I'm hoping that they split their stock. That would be pretty nice as well. You know, they pull off a Starbucks. So I have to give you a shout out to Patel with the what was it? Corning GLW. That's a very good dividend growth stock out there. I love doing a review on it, and I definitely bought it. Yeah, banks and REITs. I've been buying those guys for the past 2 years. I'm kind of going through the trends and buying them, and it's paying dividends. Ha ha ha. Bad joke, but they're so down, and their dividend growth is pretty solid if you're in the right ones. And being at 100+ shares in realty income, and reinvesting dividends, that's beautiful. Hopefully, EPR Properties hikes their dividend. Who knows? They were hit so hard from the pandemic. I'm just glad they resumed their dividend. But there's just some of them out there that Prologis. I mean, that those guys are beautiful with their dividend growth. American Tower, um, but DLR. I mean, I did that review, and I don't know. I mean, I'm a little concerned about their high payout ratio, and I'll probably have another video with concerns on them. I'm just glad that I bought it and then pulled the trigger on it and got rid of it. I've been really hoping that I can buy more shares in my M1 Finance dividend portfolio with NNN as well. Analysis today: the 200-day moving average for the S&P. I think we're in big trouble. I think they got to put their people in the government need to put their pride aside and say we are in a recession. It's um, me being called off as a nurse because of a low census is like almost unheard of, especially when the demand for patients is high. It's probably because I cost too much being a travel nurse, but that's kind of a sign something's not going right, just to be honest with you. And, low census, people are a little hesitant on sometimes. I've noticed a trend too that people are not, a lot of people are canceling doctor's appointments. And that's a little concerning. It's just, when you see a trend and stuff, people will cancel stuff a lot. Sometimes in healthcare too, or even dental appointments. I've seen that too, and I get hooked up right away for a dental appointment. Do you know how hard that is? Get a dental appointment too nowadays. Just the trends. I mean, you can feel it. I mean, obviously you have to use logic, but you can just feel that something's not right. What do I think about this week's earnings? I don't know. I don't have an answer. I'm probably assuming it's going to be in the negative. I mean, gas is high. I don't see as many people going out as much. Um, there's just the trends just don't look good. Like when people are starting to be tight on money, you're seeing it. And, I'm seeing it in Northeast Ohio. And I'm even like being a little bit more conservative. Well, the thing with VC too, and a lot of you guys, tell me to do reviews on VC. The thing with VC properties is, it's an in-demand real estate investment trust. People love to party and gamble. It's like a sin stock, and people are, it's like Altria. People are still going to smoke, and that's just what they do. And it doesn't matter how much you tell them not to smoke, they're still going to do it. And it's sad, it really is. People wear oxygen in the smoke. It doesn't make any sense. They still do. Hey, do you have COPD? Yeah. Well, you're still smoking. Well, I know. That's unfortunately the norm, and that's why Altria is still pretty strong. I think, obviously in August, I was going to let you guys know too that I'm going to be a little bit more transparent with going live and stuff, because that way we can get a lot more people on. But this is kind of a wing it thing with my day off, so um, I hope you guys are enjoying this, and I need input from you guys as to how the way that, this channel is going. It is growing. It's doing really well, and you guys have been amazing on this channel. But I still need input from you guys as to seeing how things are looking. So I may do some software with doing a dividend analysis in certain stocks as well. I'm pretty sure, somebody can correct me if I'm wrong, but Energy Transfer just hiked their dividend. Is that correct? And the other thing with VC is GLPI. I like those guys as well. And I've been buying them, and hopefully they will be hiking their dividend. But I'm going to tell you, with my M1 Finance dividend portfolio strategy, I'm going to probably be re-adding QYLD, RYLD, XYLD, and JEPI and JEPQ and Devo, and I need to, because I want them to buy Starbucks and all those other dividend growth stocks that are out there. So, very excited to start doing that again. I really want to focus on these covered call ETFs in my E-Trade dividend portfolio. I actually sold all my crypto and threw it into TSLY, which I'm hoping that TSLY will start buying APLY, and then APLY will be able to buy OARK and then go from there. So that's kind of my strategy right now. I want to have enough passive income from those guys so I can start buying the real juggernaut dividend stocks that are out there. Now, sure, I'll have to pay taxes, blah, 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 but it's totally worth it. Yeah, Apple's very innovative. And I mean, you see their um, people put money in there, they get interest and stuff. I think it's, what is it, 4% or something like that. So Apple's very innovative. Honestly, I still think that Walgreens is very innovative regarding what they do, especially with cosmetics. Did a big video on those guys with like cosmetics and how they do well internationally, like with makeup and stuff. It's actually surprising, and I do a pretty good job with that. And it's not just um, certain things, like just being a pharmaceutical, like or a pharmacy. They still do well in other stuff, which is quite impressive. Trying to think also, um, one thing that's important with what is that? I was going to mention with I just had a brain freeze. Is what was that stock? Oh, just crossed my mind. I'm trying to think which one I was going to mention. Oh, with IIPR is their debt, and what are they going to do because their dividend is really high. So I was going to mention that you start to see the dividend distribution and the dividend yield getting higher. So IIPR, again, like I said before, I think they're way overvalued. Still think they're way overvalued. For it should be like in the $70 range. But hey, I'm not a financial guru and giving financial advice. It's just they're too big. I mean, they have a pretty big bark, but their bite is not backing up their bark yet. CVS is that's another one. I mean, the same model as Walgreens. They're strong. Cardinal Health is another one that needs some attention. They're looking pretty good. And Medtronic as well. Those guys are looking pretty good. I think Medtronic's undervalued. It's just me. I was going to ask you guys what dividend stocks you've been buying recently. Any good picks for international? Um, Canadian stocks and U.S. stocks are the only two that I'm probably going to focus on. Um, Canadian stocks, probably Bank of Montreal, Enbridge. Enbridge has been good to me, so I know the taxes are this and that. Still buying Zim. I still have Zim. I've been looking at them. USB and Ally. Yeah, I like Ally right now, and I've been loading up in those guys, and I feel good about buying them. I'm trying to see if I can get Matt Money on. I'm actually texting him right now. See if I can get. Come on. Try to get more people. Let's see if Matt Money hops on real quick. So again, a lot of you guys are just popping on. did you guys like my video on DLR and the potential risk of a dividend cut? I see those guys in the hot seat. I saw some red flags and I jumped ship right away. So the other thing is, how many shares of TSLY do you guys have? Wow, that's 350 is pretty good. I'm hoping I can get 350 or 400 and have consistent income of 300 or so, and then use the income, like I was saying, to people earlier, use that income for TSLY to buy APLY, and then buy ORC, and then just keep on going on from there, because that'll just be a chain reaction, just getting more of these. That way I can have consistent dividend income with those guys, and then just really, really turbocharging my dividend portfolio. I want to buy really good dividend growth stocks, and I want to use that income from those covered call ETFs to buy very good dividend growth stocks. I mean, I can load up on Franklin Resources. I can literally, if I can get to like $2,000 a month on that, at least. I mean, imagine how much you can start loading up a lot of those dividend stocks, or even throwing an extra 2,000 in realty income. I mean, that's pretty dangerous with doing some dividend income and the dividend snowball effect. So there's a lot of ideas with these covered call ETFs that I can implement. Yeah, I mean DLR. I mean, they have a very good strategy, but man, that debt's killing them right now. From what I've seen and heard, is SCHD might be with those covered call ETFs. That's one idea that I had as well. I think that's one very interesting and unique strategy, is to have those guys buy them, and then possibly use them to buy, Prologis or something, then use the income from Prologis, if I load up on that, start buying other dividend stocks. So that's a great point right there with SCHD. I mean, I want to really make some really good dividend income, and SCHD is right now the real deal. I will probably post a video with SCHD, one in particular with their dividend trends, because it's not, their dividend trends aren't 100% consistent. But I have SCHD in my IRA. I think that's kind of a turnoff too. I was going to bring up with all these ETFs is the expense ratio. I mean, you load up on it, the expense ratio, it takes money out. I still want to increase my net asset value, but SCHD with that passive income is very nice. So that's why people are just loading up on SCHD. Thoughts in which stock? MPW, I did post a video on them recently. I explained to you why I'm still buying them. So that was literally a few days ago. Telling you, man, you guys gotta hit that notification bell. Check my YouTube channel daily too, because I try to squeeze in shorts or I try to squeeze in videos. But I gave you my rationales as to why I'm buying them. Yeah, I saw that with somebody posted that on Twitter regarding their earnings. I got one for you guys. How many of you guys have been looking at that one or own those guys? What's going on, Richard? I kind of went on here. Richard, today is kind of a wing it thing. Being off today, I just felt like going on, seeing how you guys are doing, getting suggestions, and going from there. I know a lot of people are like in and out and all that. Just felt like hopping on till about 4 o'clock and going from there. Yeah, NNN is drive on. NNN is big, and this is what's going to help if a recession happens. Of course, you guys know I'm not giving financial advice, but the bigger companies are going to be fine. They have a high tenant rate of people paying rent. Occupancy rates very strong. They're a landlord for a lot of companies that are in demand, and that's what has them strong. And I think they're going to be. I see them as fine. I'm loading up on them, and I feel pretty good with them. So I'm going to continue to buy those guys, and I need to get at least 200 shares of NNN and then really start doing some damage. I think if I can get to 200 and then they start growing their dividend, I mean, holy cow! I mean, that's going to be huge. So that's why I'm having my income stocks by my dividend growth stocks. So NNN is one of them that I absolutely love. Spirit Realty Capital is another one. And of course, Agree Realty Corporation. So, that's another one that has serious potential. And I agree, yield mass is going to be interesting. I think with them doing that, it's going to cause more um, people to start doing these covered call ETFs, more companies start doing covered call ETFs or invest in companies. So don't be surprised if Global X starts trying to do stuff that Yield Max is doing. And I mean, Yield Max, they're covered call ETFs. If they get on M1 Finance, that's a perfect way that they could start buying. You can use those covered call ETFs to start buying your dividend growth stocks. So that's one thing that I'm excited about. If I can get those on M1 Finance, start using their covered call ETF income, start buying my dividend stocks like Starbucks. I mean, holy cow, there's a lot of opportunities. I mean, I don't have to put any money in. I mean, it's like Yield Max is doing it for me. With their covered call options. Now, of course, taxes is going to be a little interesting, but that's the other issue. Yeah, I think the Berkshire B with Yield Max is going to be really interesting. Um, the Apple one is going to be really interesting. I There's going to be a lot of potential with that, so I'm hoping my Tesla shares can buy Apple and really going from there. I mean, I want to start loading up and having that income just start loading up on Apple. That would be beautiful on the APLY. Oh, I got rid of ONI a long time ago. That little spinoff, long time ago. I took that money and ran. Yeah, I don't see any. I don't think ONI is a good REIT at all. I really think that one's waste of time. What's going on, Matt Money? So the other thing is, with Matt, I was going to see what you think of these covered call ETFs. I mean, with Yield Max, I know there's a high expense ratio, but are you considering that one, or are you just going to do options by hand? Doing your own thing. Yeah, I, I was going to see your thoughts on these TSLY and these other covered call ETFs that are out there with Apple and all that. I know that you do your own options. Okay. I mean, I think there's a better opportunity with your own options. I mean, that's one thing I need to do and learn how to do it. But it's interesting. Um, it's for people like me that just don't have time to do that. I mean, it's not a bad idea or strategy. Hmm. Will I hold or keep the J&J spinoff? I'd have to look at it a little bit more. Johnson and Johnson's a very good dividend stock, a very good pharmaceutical stock. Honestly, one of their best products out there is Tylenol. It's like a first wave medication for pain. People buy Tylenol like crazy, and you see the Johnson and Johnson label everywhere. So a lot of opportunities with Johnson and Johnson. I know people are like throwing a fit about the baby powder. I don't think that's going to be a big deal in the future. They're just such a big and powerful company. I know their vaccine was like so, but it's going to be interesting. Yeah, I mean, everything's preliminary with yield max, so um, could blow up in our faces. It could be, something good. Yield max is a dark dividend special. I'm just hoping that I can get decent passive income and start buying my dividend growth stocks like Starbucks and stuff. Gosh, if I can use that income from some of those guys and distribute their income into like some very good solid dividend growth stocks like Starbucks or Tyson Foods that I have, or Conagra Brands, which is a pretty good one, or even Franklin Resources. I mean, there's a lot of opportunities with that passive income from coming from those guys. No, I mean that's what I'm pretty much what I was referring to. That 1% expense ratio is too much, and long term wise, it's just better to. And I agree, dividend growth is a lot more important. And what I some of my strategies that I have with and I'm QYLD, RYLD, and XYLD is well the yield max. Well, wait, hold on. Use the money you are putting. Well, yeah, but I'm just trying to. I mean, I'm doing both at the same time. I'm using my play money for yield max, and what I'm going to do is use that income to buy the next yield max dividend one, so I can get 200, 300 from that yield max, and then use that to buy the next yield max covered call ETF, and then just keep on going so that I can eventually use that final income from those guys to where I get about 1,000 to hopefully $2,000 a month, and then start buying the dividend growth stocks with it. So, VTRS, obviously, I said my goal is to get to 400 shares. That's a goal. And again, that income with those guys can buy Key Corp. It can buy also Huntington Bank shares. That's my goal is to get to 400. And, VTRS, I'm still buying, stuff. And then what I'm going to do probably with Arbor Realty Trust, if they, depending on how they do, is use that dividend income from Arbor to start buying other dividend stocks. So, the thing with Arbor is we'll see what happens with the upcoming recession. But again, those income stocks, Ares Capital, um, ORCC, they're starting to buy my dividend growth stocks. That's what the strategy was loading up on them and then using their dividend income to buy the other stocks like NNN, like to buy Stag, to buy Agree Realty Corporation. So it's starting to work, the income from that. And they're starting to buy Jackson Financial, Regions Financial. So it appears to be working so far. So that's what I'm happy seeing is that, that it's starting to kick in. Yeah, I mean, that's one thing I plan on doing is using that income from Yield Max I'm looking at doing that with SCHD as well. And then using the income from SCHD to buy Pepsi because that money has done extremely well with Pepsi. If I can get to 100 shares with Pepsi and finally figure out how to do options and all that, there's a lot of opportunities with turbocharging my dividend portfolio that way. I just don't have time to learn how to use it right now. So I wanted to use kind of like a domino effect with Yield Max, get to about $300 a month, then buy the next one, and then get $300 in that one, and then buy the next one, the next one, next one, next one. So hopefully they all consistently give me around, like $2,000 or so. Well, the good thing is my dividends are hiking. Okay. My dividends are hiking, which is good. Okay. And my income stocks are buying my dividend growth stocks. That's what the goal is. So it's starting to work. It's starting, and it's very exciting because I mean, literally, and Matt and I kind of agree with Altria. I mean, I'm just going over my dividend um, trends right now. I made $60 the other day, uh, and, and that's buying NHT. I'm sorry, NNN. That's buying Pine, that's buying Acre, that's buying National Storage, as well as Regions Financial and Medifast. So those dividend growth stock, the income stocks are starting to get there. Well, I know you have $101 million portfolio, but again, I'm trying to do my strategy is different, and so far that way I don't have to put a single dime into buying dividend stocks when I'll do it. No, it's a unique strategy I have. I mean, I just don't want to pay. I want to get to the point where I don't have to pay a dime, and my income stocks are paying for my dividend growth stocks. And then so far, it's looking pretty good right now. I mean, it's a unique strategy, but it's working. I mean, I'm actually gonna probably make $1,000 in dividends, which is in a month. It's gonna be interesting. It's a risk. I'm not gonna lie, it's a risk. And those dividends, the passive income, um, it's everybody has different strategies. So, I mean, kind of helps with the covered call passive income. It's, yeah, I mean, there's a risk to everything. But at the same time, we're getting dividend growth in those good dividend growth stocks. I mean, I just like I'm just trying to get to the point like in M1 Finance where I don't even have to put anything in it. And my income stocks will buy the dividend growth stocks. I mean, it's so far it's starting to work. I'm dollar cost averaging every week, throwing 500 a week into it, and it's buying some of my very good dividend growth stocks as well as income stocks at the same time. And it seems like it's working. But you always, how do I want to say this? That income, okay, from Yield Max, okay, it's not going to be like a life changer, but it's something that I can park my money in if they're looking good, and just start using it to buy dividend stocks. And then I can maybe invest it more in Fundrise because I have a goal for $100,000 in Fundrise and see what happens with that. So it's just trying to find something to distribute money and stuff so I can buy, and be that. It's kind of like the master plan. The income stocks buying the dividend growth stocks. No, that's understandable. My portfolio against the S&P actually is it was plus 77% or something like that. I was doing pretty good. Let me look right now. An E-Trade. I wasn't even trying to mess around with that. I know probably it wasn't doing it well. But let me see how I'm doing against that. What in the hell? No, I see where you're going, Matt Money. I mean, I'm distributing money in numerous directions. It's I mean, everybody. I'm not. How do I want to say it? It's just a way to distribute money, and this is why I'm travel nursing to try to incorporate the strategies so where I can buy dividend growth stocks, income stocks, and use these covered call ETFs to kind of turbocharge my dividend portfolio instead of doing the options way that people do to use covered calls. No, I agree. I mean, it's what people are doing more closer to retirement. Let me actually look on E-Trade. I think I was doing pretty well. But with the traditional IRA, I have SCHD, I have VTI, and I have VGT. So I mean, I am kind of. That wasn't I think that was a good move that you made with Matt, with Altria and SPY. Where am I? I'm gonna load up, see how I'm doing. Why is this not letting me get in? Trying to get in right now. For some reason, I don't know if it's the internet right now. I'll post that on Twitter. How I'm doing. So, let's see. The Key Corp, I was going to tell you, Matt, in Key Corp, that one, I'm going to hopefully get to 400 shares by the end of the year. Their dividend growth is not too bad. That's good. But I fully agree with Matt's statements with finding dividend growth stocks. Going all in with SPY, huh? That's pretty impressive with PEP and J&J. Matt, how much are you making in options a month usually? Yeah, I mean, what really helped me with my dividend portfolio was the dollar cost averaging. I mean, I think that's the important with dollar cost averaging, because I mean, you can have stocks be at a lower price on Monday than they were a week ago, or they can be above. But you know, if you just do a lump sum, I think that's just, it could be a little risky sometimes. Kev Dog, I was going to ask you a question. Do you like Vanguard dividend appreciation? I know you're a big ETF guy. VIG, are you a VIG fan? Nice. Yeah, I got VTI in my IRA, and VTI and VOO. If I could master options, I'll probably buy those two separate from my dividend portfolio, just with options money, and eventually just load up in those guys. One for net asset value, to increase the net worth, and as well as they have decent dividend growth, but being a part of the S&P or competing against the S&P is always important with increasing net worth or net asset value. VOO, does both, and it does dividend growth. And VTI is very good, low expense ratio, and that's the thing with my previous employer. I still have a 403b, and it's the Vanguard Admiral shares. I'm 100% in the Vanguard Admiral shares. The VTI, it's the total stock market Admiral shares, I think. I think their ratio is 0.02, which is not bad, and their dividend growth is pretty good. I I like VTI a lot. Because if one company, sucks, and VTI actually is a pretty decent dividend growth ETF. If you look at their dividend trends and dividend history, it's actually pretty consistent. So one, if you have VTI in a brokerage account, you reinvest the dividends. There's a lot of potential. And Vanguard has a history and reputation of splitting their shares. So that's one opportunity that may happen in the future of the VTI. But from a investing standpoint, I do agree with Matt Money's and Kev Dog's philosophy. You shouldn't just be 100% value investing or income investing. You should invest in certain stocks or ETFs that improve your net worth and net asset value and keep up with the S&P. And a lot of those ones do increase their dividends over time. They have some excellent companies in them. So diversification is important. And just like Matt Money said I'm pretty sure you said with QYLG over QYLD, and I agree, because one, it's going to increase in net worth, and it's hopefully going to hike its dividend over time. So I should, hopefully one of these days we'll go live again with Matt. I want to see what his strategies, how it's working, and how things are looking with his investing strategy. Very innovative. It's very underrated, and I do believe that Kev Dog Millionaire is another underrated investor. Any other comments out there? We've got a few more minutes left. Do I think the markets will be red on Monday? You know, I have money for strike money with throwing in stocks, dividend stocks, ETFs. That's pretty nice. Finding that with Bitcoin, but I dollar cost average with my IRA every Monday. If it's red, that's great. If it's not, it is what it is. But I'm also dollar cost averaging in my dividend stocks on Monday. So whatever happens, happens. But you know, there's just better to dollar cost average. I just like Monday is a good dollar cost average day. No, it's good if you're young, because you know people like young people like myself. I guess being 37, calling myself young, um, it's there's opportunities. So the reason why I don't lump sum like my IRA is just if there's opportunities. You know, if you know somebody hits a panic button on Monday, and there's you know the futures are bad, people freak out. I may have an opportunity to get shares of VTI or VGT at a cheaper price, possibly. So that's I just like throwing 125 a week into my IRA and then go from there. It's not a bad idea to lump sum. I mean, honestly, I mean you can have with your dividends that you have. I mean, the dividends can buy other dividend stocks and stuff. Sometimes it pays off though to lump sum. So you know, I'm not a person that likes to time the market. I just like to dollar cost average. I like to distribute money everywhere. I know Matt's just started doing some the Airbnb. That's one thing that's very innovative doing real estate. It's just good for me, you know, with my philosophy too. And I agree that you should have multiple sources of income. And I don't I don't see anything wrong with just having money in ETFs. I mean, you don't have to worry about certain stocks doing bad. You know, if one stock does a dividend cut, big deal. You know, like with VTI, you have so many companies. Like, you know, you got Apple and all them to back up other stuff. So there's always positives with that as well. I mean, there's people. I think Marco Investing Finance. He's all into ETFs too. It's just, you know, it just depends. I haven't done covered calls yet, but I'm going to start. I have a count on Webull, and I'm going to start experimenting with it. Again, if I can do covered call income, I mean, Matt could probably grill me and, you know, if I screw up on some calls, but he does really well. Um, well, guess what? I'm getting IIPR on Monday already. It's my dividends from Altria are buying that. And hopefully my dividends from Altria start buying Starbucks as I change the distribution to some of my dividend growth stocks very shortly, because once I get to 100 share, uh, you know, there's going to be a lot of opportunities with those 100 shares buying, you know, stocks like I wouldn't go that far. I mean, Matt, you're very innovative with what you do with Palantir and the other stuff. I mean, you're very well diversified in your portfolio. I think that's really good. Now I'm starting to have the resources to figure out the master plan and go from there. But the options play is just it's good. That's great. I don't even know what my net asset value is. I'm probably around. I don't even know. I'd have to start looking at that. It's going to be interesting. But I think the best case scenario, like what Matt does with options play, and like what he does with Palantir and stuff, that's probably the best case scenario. I got to grow a pair and start doing that eventually. So I need to get on Matt Money's level with options. I mean, you do options with SPY. I mean, you're just really loading up on that, and that's pretty sweet. And I think the big thing with what you did with Altria and throwing that into SPY, that was an aggressive move, and I think that was a pretty smart idea. Because I just posted a video on Altria. I consider them a disappointing dividend stock. Their revenues, I don't know if their revenues going to cause them to do dividend increases. I mean, you just look at the trends each year. Sure, people smoke, they don't care, but the problem is, is that dividend sustainable? Now, they have a reputation of increasing their dividend, but their revenue isn't very strong. Versus you have all those stocks that are within SPY, it's not going to be stagnant. I mean, what is Altria? 8% dividend yield? I mean, that's one thing. It's very disappointing. I mean, I know the board of directors are under a lot of pressure to increase the dividend, but it's just the potential with it's just better. I think that move that he made was much better, and I think Matt, do you know if Dave's going to be back soon? No, he's hiding a little bit. Well, Altria's the dividend income from Altria is good to buy dividend growth stocks. That's just my philosophy. So the income, like what I'm doing, like for example, Altria is buying me NSA, which is a very good public storage REIT, which has exceptional dividend growth. It's done very well against the S&P. It has good revenue. That I feel more confident with NSA increasing its dividend income. That's why I changed the dividend distribution on M1 Finance to 2% for Altria versus 3%. And that way, the dividend income from Altria, because I loaded up on it just for that reason, can buy Starbucks, can buy Tyson Foods, can buy who else do I have? I have like really good ones, Jackson Financial and Prudential and those type of stocks. So that's one strategy you can do with Altria, is you use its dividend income to buy other dividend stocks. And Matt did that before, and it's yeah, I mean that's one strategy that people do. And IIPR's dividend, I like throwing them into, and I'm hoping I can throw it into like NNN or Getty Realty. I mean those are good fundamentals, good FFO. Just long term. You got Prologis, you got Stag starting to make some noise. So I did rebuy it. I do think Prologis is way better than Stag, but I mean Stag has potential with its FFO and its growth. So, and then you got Agree Realty Corporation. You get dividends from another one. Well, I think IIPR was way overhyped and way overvalued. That's why it's starting to get to reality. Again, that's not financial advice. That's just where I'm coming from, from a thing. It does have lower dividend growth, but it still is consistent with its dividend. I have Kilroy Realty a little bit higher than MO. I agree so far. KRC is one. Medifast MED is a really good one. That's one thing that I kind of turned off by with gosh, I have like a brain freeze by Stag. But again, certain dividend stocks, they start off slow, REITs, then they blow up. With dividend growth, I've seen that happen, and with certain dividend stocks that come out of nowhere, and then the funds for operations are doing really strong, and there could be potential with Stag. So definitely having some of my dividend come with Stag is helping. I'm thinking, with DLR, I find it very interesting, and a lot of you guys, if you saw the video, the payout ratio, I literally sent Matt Money a text. I'm like, oh my gosh, what am I doing? Like, why did I do this? I bought it and then I sold it right away. I just saw a high payout ratio. It's insane. It was like 400. If you watch the end of my video, it was really high, and I was like, oh my gosh, this is terrible. I'm gonna probably give it about 5 more minutes. You guys have any thoughts? No, I have not. Still not bad. 1900 is pretty good. All right, before I conclude this, Wilson, probably the best monthly dividend for me is realty income. I mean, it's a no-brainer. Probably dividend safety and everything. It's realty income, no doubt. And Agree Realty Corporation is another one that I should load up on. But I'm going to conclude this going live. It's kind of a wing it thing, and I appreciate you guys getting on. This is actually for a wing it. It was pretty good for the number of people, and appreciate you guys being very active on this channel. And of course, this is not financial advice for entertainment purposes only. Disclaimer in the description. Thank you guys so much. Oh, you're bad, Matt. All right. You guys take care and have a great rest of your Saturday. And I'll have a video for you guys posted tomorrow.